Hi guys, it's your FX coach Bliss $1 billion, and in today's video we are going to learn about the market orders. So we previously learned about when, or rather what makes you think you're going to buy or sell, and we learned that there are various things like fundamental analysis, technical analysis, and we said we're going to stick to technical analysis. Now if you gotta know to say we're gonna be entering at this position, but then there are various types of orders that you can choose to enter. For instance, if a particular price of an asset is not very favorable for you and you want to maybe buy or sell a particular asset at a later price of your choice, you can use a certain type of order. And if you just want to buy an asset just there and then, you can use a certain type of order. So now, in this section, we're going to learn the various types of orders that we can use to enter the market. For instance, if you want to enter the market now, we'll know the type of order to use. If you want to enter the market at a later time, we know the type of order to use. If you want to protect your account from all your money or investment being bent, we'll know what type of order to use. If you want to exit the market automatically at a certain particular point, we'll know what type of order to use. So guys, without wasting much of the time, let's get started. Yeah, so the market orders. So a market order is the most basic type of trade. It is an order to buy or sell immediately at the current price. Market orders are popular among individual investors who want to buy or sell an asset without delay. The advantages of using market order is that you are guaranteed to get the trade filled. In fact, it will be executed instantly. So the first type of market order is called an instant execution order. And with this type of order, once you place buy or sell, it means you enter the market at that same price. Whatever price it is, you enter the market without delay, right? So for instance, I tell you to say sell Boom 1000 now, or I say at the current market price, or CMP. CMP simply means current market price. This means all you have to do is place an instant sell order. And here are the few steps. If you open your MetaTrader 5, you see this little plus button over here. And this is the button that you always use when you want to open any type of order if you're on your phone. Thereafter, you find what is written market execution. And this is the page where you only have to adjust your lot size here. This is your lot size here. This is your lot size. And you can put a lot size of your choice. Remember, a lot size will determine how much risk you are willing to take, right? So once that is done, since we are selling instantly, and you only place buy or sell. If I said buy, you buy instantly. So meaning you're going to enter the market just there and then, right? So it's a no delay order. You enter just there and then, whatever the price, but you enter just there and then. So once you're done, once you've entered, and you're going to see an order like this one is saying buy, meaning you've bought hashtag to something something. It will have another number here, any number, then it will write buy. Then it will even show your lot size here. So in this case, this trade, we use a lot size of 0.1. Right? Very easy, guys. You can try this on your MetaTrader, demo account and see. You are now able to place your first order. So now let's talk about another type of orders called limit orders. We're going to talk about what they are and why they are important. So without wasting much of the time, let's get started. So a limit order is sometimes called a pending order. And the pending order allows you as an investor to buy or rather sell an asset asserted at a certain price of your choice in future. And how do we determine this particular price that we would love to enter? It's by analyzing the market. We're going to learn how to analyze the market. That is why we're here, right? So let's say if at all you don't want to buy a particular asset, or rather sell it at at the current price, and you so wish to sell or buy at a later price, you're going to use what we call a limit order or a pending order. So this type of order is used to execute a trade if the price reaches the predefined level. However, the order will not be filled if price does not reach that level. So you can determine a particular level to say, I'll enter from this particular zone. And you put your limit order, your pending order there. It's not always that price will go there. Sometimes a day might just end, months might just pass without price ever returning to that zone. But with the kind of teaching that I'm going to give you, we should be in about 98% of knowing where we can place our limit orders or our pending orders. So now, there are different types of these pending orders, or rather limit orders. And we're going to talk about them one by one. So without wasting much of the time, let's go into them. So these types of limit orders are as follows. We have a buy stop, a buy limit, a sell stop, and a sell limit. So now let's dissect each one of them one by one. So a buy limit. What is a buy limit order? This is an order to purchase an asset at or below a specified price. So we have a situation whereby if price has been going down and you want to buy it at a later price, and maybe you won't be around or whatever, you'll be busy, you can simply set what we call a buy limit. So let us see where we use a buy limit. So we use a buy limit when price is currently going down and we expect it to touch a certain level, then we expect it to bounce and start going up. So here is a picture. So here is an illustration. Price has been moving like that and it reaches at this particular point. It starts to fall. And we expect, since we've determined to say this line has been obeyed, we'll learn about these lines later on, and we expect it to come and touch this zone and then start flying all the way up. So if price is going down like that and we want to buy a particular asset at this zone, so the kind of limit order that we have to use here is what we call a buy limit. Right? Let me repeat. So if price is currently going down and we are anticipating that it will reach a certain level, then once it touches that level, it will bounce off to start going up. So instead of just entering at whatever position just because we know it's going to go up, what we are trying to do is to minimize the risk. So we can use what we call a buy limit to set our buy limit order at that particular point. So what this means is that we'll only enter the trade once price reaches that particular point of our interest. So in this case, this is our particular point of interest and we'll only enter once the market reaches there. So if you're going to be busy or whatever, you're not going to be around, you don't want to miss out, you can set what we call a buy limit order. And once it reaches there, maybe it might start going up or it might start going down. It might continue going down. So sometimes you might get it right, you might not get it right. So it doesn't mean once you set a buying limit order, then the price will obey you just because you've set a buy limit and you start going up. Sometimes you make a loss. Yeah. So let's go to another type of order. So let's now first look at the picture and be able to appreciate how a buy limit order can be used. So first of all, we can see from the picture here that the price was going up, then it started going down. This blue here, it shows where the price is. And if we analyze to say price will come all the way down, touch this particular zone and start going up. It might maybe exceed with a few pips and all that, but if it touches this particular zone and continues to go up and bounces, will be in massive profits. So in order to enter this desired price of ours, since we are expecting it to start going up, we use what we call a buy limit order. So all you have to do is you get this number where you've put this line, you get this number, and this is where you're going to enter from. So this number, you reserve it somewhere, and these are the steps in order to set up your buy limit. So already you click on that plus sign. If you want to enter a trade, you click on that plus sign, this one, right? After clicking there, you are going to be taken to this page, and this page will be written market execution. So just click here. Just click here on this same market execution, and it will give you all these types of orders. But right now we are interested in the buy limit order. So we'll click on buy limit. After clicking on the buy limit, you've seen it has even changed. It has put buy limit. Now the price at which you want to get into the market, this is where you put where it's written price. So you have the positive sign as well as the negative sign. So you can be increasing the price. As you click on the positive sign, the price will be changing. But you can just delete everything and just type in the price of your desired entry. After you finish with all that, you place you press where it is written place here. Yeah, you press where it is written place. So once you press there, you actually set what we call a buy limit. And once that is done, then the buy limit will be there on your screen. So another type of order is the sell limit. So a sell limit is the opposite of the buy limit. So what it simply means is that if price is currently going up, but we establish that it will reach a certain level, and once it reaches that particular level, it will start dropping. So if we don't just want to enter just there and then before price reaches that particular zone, that point of interest, area of concentration, we can set what we call a sell limit order. So let us see what we truly mean. So you find that if price is moving like that and it has reached this point where it is going up, right? Price has to be going up. And we anticipate that if price reaches this particular zone, it has to start going down. So this is where we can place a sell limit order. Once you place a sell limit order there, and we'll be good to go, right? Yeah, so basically that is how you set a sell limit order, and all you have to do is just follow step 1 and step 2. In order to find the sell limit, you come here and you pick the sell limit order. After that, if for instance you actually projected that price will be going up and you want to sell from that particular zone, you just get this price and put it here on your sell limit. You change your lot size and press the place button here, and boom, it will be done. So now let's look at another type of order, and this type of order is actually called the buy stop. So we use the buy stop order in a place where price is currently going up. If price is still going up, but then you fear that maybe at some point it might not break a certain level, or rather a certain level of support or resistance, but then you feel if it breaks, then it will go up like all the way. So this is where you use a type of order that we call the buy stop, right? So So where and how do we set up this buy stop order? So the first thing that you have to note is that price has to be going up initially. And the anticipation is that it will reach a certain level and it might continue going up just like that. So instead of entering at that particular price, you decide to enter at a later price. And let us see from this illustration where we can use a buy stop. So this is price that has been moving like that. It reaches this particular point, it starts going up. Once it starts going up, you see where this blue line is ending, meaning that is where price is. But you anticipate that it will start going up, it will continue going up. So you can simply set a buy stop order just above the price where the market is. Or rather, maybe if you see certain things, let's say maybe a level of resistance or a base or whatever that it is, but if you feel once that level is broken, price is gonna fly. So you can use what we call the buy stop order. So basically that is how you use the buy stop order. And here is an example. So if, for instance, you can see these arrows indicate that price will be going up and it will continue and maybe reach somewhere there. So you want to enter at that particular point. So all you have to do is use a limit order that is called buy stop, because price is currently going up. So you use a limit order called buy stop. You copy this price where you want to enter from, and boom, you follow the procedures. You're going to put your price where you're going to enter from. Of course, you're going to choose the buy stop, and then you press place and your buy stop limit will be there. So now let's talk about the sell stop. A sell stop is simply the opposite of a buy stop, right? Yeah, it's simply the opposite of the buy stop. So when and how do we use a sell stop? First of all, price has to be on a sell trend already, or rather on a bearish market. Yeah, let's start using those terms. It has to be in a bearish market. Price has to be, bearish. So, and if it is in a bearish market, the idea is that we expect it to continue falling, maybe after breaking a certain support level, and we expect it to continue falling. Let us look at the illustration. For instance, price has been going like that and it has reached this point, it is already falling. Maybe there's a point of support there. Once it's broken, we can set what we call a sell stop there, meaning it will have to continue. Once price hits that sell stop, it will be activated and it will continue going down. If at all, it has to continue, if at all your analysis was correct. So basically, the procedure is the same. If you anticipate price to continue after that level, you can get that number, and boom, if it continues, you'll be making money. If it doesn't, you'll make a loss. But of course, we're going to teach you how to analyze the market and be able to tell whether the market is going to continue going down, or rather whether the market is going to continue going up, or whether the market is going to change direction. The procedure is just the same. You just have to choose a sell stop. So now, in a situation whereby you have entered the market, regardless of whatever order that you used, but then you feel the market might start retracing after a particular level. So now, and you want to exit the market at that particular level, but then maybe you want the market to take you out automatically of the trades once that particular level is reached. So what type of order do we use? We use what we call the take profit. So whenever your take profit is hit, you exit the market with profits. That is why it's called take profit. So it is something that you can place, or it's something that you can just do. You just click on your trades and once your take profit is hit, you exit with money, right? Yeah, so let us see an illustration of where we can use it. So let's say, for instance, you entered there. You entered from there, right? You sold. You enter a sell. boom, 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 boom. And you expect that if the market hits this level, it might start going up. So what do? You put what we call a take profit. So what it means is that once your take profit is hit, regardless of whether the market continues going to go, it continues to go in your direction or it reverses, but once your take profit is hit, you instantly, or rather automatically, exit the market with a profit. So we use the take profit order to exit the market with a profit. So now, what if you've entered the trades, maybe you're not very sure and you're scared to lose all your money? The good news is that you are very much capable of controlling how much money you should lose if a trade goes against you. And you are able to control how much money you lose by using a particular order called the stop loss order. So whenever a stop loss order is hit, you exit the market with a loss. Right? And it happens automatically. If you enter a trade and you put a stop loss there, you exit with a loss. So let us see an example. So let's say you enter a trade there, you place a sell, and you feel that if the market continues to go up and it comes to this level, maybe you've calculated to say if it comes to this level, you'll be losing maybe $10, $100 or $1,000, whatever it is, and you don't want to lose beyond that amount, you can put what we call a stop loss. So a stop loss will be there and your take profit will be there. So the stop loss is simply an opposite of a take profit. Take profit, you exit with profit. Stop loss, you exit with a loss once the trade goes against you. So you are in charge. You have the power to control how much you lose, how much you gain. Let us continue. So let us look at this picture. If the market, you are expecting that the market is going to fall, but instead it goes up. You entered a sell here, remember, and you are expecting that the market is going to fall, but instead it goes against you. So once it reaches where you put your stop loss, then automatically your trades will stop running and you exit the market with a loss. So it prevents you from losing so much money. You can determine how much you lose by using a stop loss. So basically, that was it about the pending orders, and I hope you can practice, check them out, try to put them and all that, see where they work and how you are supposed to use them. So that was it. I'm Bliss $1 Billion, and I'll see you on the next lesson.